expecting few more participants to join, but that's fine. They can join whenever they can. So we'll start our discussion with the circulars which were issued based on the 50th GST Council meeting, which had concluded very recently. So just before we start, there are two parts to it. One, GST Council gave a lot of recommendations, okay, including the change in rate of taxes, the exemptions as far as services are concerned. But those have not been made effective because after the GST Council gives the recommendations, the GST laws will have to be amended, and after the GST laws are amended and notified that these will be effective from a particular date, only then those will come into play. So as of now, those are not applicable. Okay. Second, there are certain clarifications which GST Council said will be issued. Almost all the circulars have been issued except two. We will discuss those circulars also which have not been, those clarifications also which have not been issued. Plus, we'll also be discussing the circulars and implications around it. One thing which we will have to appreciate is that government is in every GST Council meeting discussing real practical challenges which the business entity is facing and trying to give a solution to it. So we may like that solution, we may not like the solution. So like in case of gaming industry, we may not like the solution, but as far as what you said, holding subsidiary relationship is concerned, we may like the circular. But the thing is that they are very clear on what they want to do. Okay, and that brings in a lot of stability to the entire tax environment in India, right? So let's go to the first circular, which was issued after this GST Council meeting. So now what was happening is, say, section 50 subsection 3 was amended retrospectively. So just to give a background of what was the section 50 subsection 3, section 50 subsection 3 says that if you have incorrectly availed a credit, but you have not utilized that credit, then government has not lost anything. So you are not required to pay interest as far as the incorrect credit has been availed. So example, car less than 13 seater, except for certain exclusions covered under 17.5, nobody can claim the credit. So assuming a chartered accountant say, I have taken the credit of the car which I purchased, okay, and the credit comes to say a lakh of rupees, okay. Now the section 50 subsection 3 said that as long as your input tax credit balance has been maintained beyond 1 lakh rupees, you are not required to pay the interest. Okay, that was the retrospective amendment which was made. Now this was useful for a lot of companies, like say real estate companies who are into commercial construction, who are waiting for the decision of Safari Retreat, where it will be decided whether you can take credit on construction of immovable property or not. So they were availing the credit but not utilizing the credit. So law was retrospectively amended to say if you have not utilized the credit, you are not required to pay the interest. Okay. So now the issue was, I have claimed the credit in CGST, but the credit balance is in IGST. Or I claim the credit in SGST, the balance is in CGST. Any permutation and combination. Okay. So there circular 192 has come into picture, which says that IGST liability can be set off against CGST liability or CGST credit or SGST credit. And the system also is designed in such a way that you can first utilize only the IGST liability and then go forward and utilize CGST and SGST liability. So even if I take a wrong credit in IGST, there is a possibility that IGST balance itself will not be there, because first I have to exhaust the IGST balance. So they're given a clarification where I said, because IGST can be set off against CGST and SGST, so that means whenever there is an incorrect availment of credit as far as IGST is concerned, the total credit balance is required to be considered. That is IGST plus CGST plus SGST. If that balance does not fall, so assuming the credit we were talking about was 1 lakh of IGST, which was incorrectly claimed, but as long as I have excess balance, say I have 1,10,000 rupees, then I'm not required to pay any interest as long as I have reversed the credit before I utilize this much amount of input tax credit. So let's go to the second example. Okay, the same 1 lakh rupees, but I have utilized the 10,000 rupees. In that case, the issue now was whether the interest has to be paid on the entire 1 lakh rupees because the balance has fallen below 1 lakh rupees of input tax credit, or the interest is required to be paid only to the extent of utilization. So circular does two things. First, it clarifies that as long as your total balance of credit is greater than the incorrect IGST credit which you have claimed, you are not required to pay interest. And whenever you utilize the credit also, the interest is required to be paid only to the extent of utilization. So in this case, because my balance has fallen below 1 lakh to the extent of only 10,000, so I'm required to pay interest only on this 10,000 rupees. Okay. Now, though the circular gives answers to, as far as IGST incorrect availment of credit is concerned, it keeps few questions unanswered because the logic which has been given is IGST can be set off against CGST and SGST. Okay, that is the logic which has been given. So what if now I have wrongly availed CGST credit, okay, and I have a CGST balance plus a IGST balance, both put together is greater than the credit which I have claimed, incorrect credit which I have claimed. Similarly, as far as SGST is concerned, I have SGST plus IGST balance, which is greater than the credit which I have incorrectly claimed as far as SGST is concerned. In that case, whether I will be required to pay the interest or not, though the circular does not clarify that, there are two ways of looking at it. One, the logic is that IGST is available for set off against CGST, SGST. So SGST is also available for set off against IGST. So going by this logic given by the circular, interest should not apply. Point number two, if you go to Rule 42, okay, Rule 42 talks about reversal of input tax credit. Okay, there it very clearly says that input tax credit has to be reversed headwise. So CGST has to be calculated separately, SGST has to be calculated separately, IGST has to be calculated separately for the common credits used for both exempt and taxable supplies. But Section 50 subsection 3 and the corresponding rule associated with that does not talk about headwise computation of liability at all or headwise computation of interest. So from that argument perspective as well, we can say that as long as I have sufficient balance of input tax credit, which is greater than the amount of incorrect credit which I have claimed, I will not be required to pay the interest. But of course, there are going to be challenges as far as CGST, SGST is concerned, because department authorities are going to look at only the IGST balances for IGST for the from the circular perspective, not the CGST and SGST. Now, second, this 2A 3B reconciliation definitely is a big headache for all of us. Okay. One, first, the law did not have 2A at all, meaning the GST portal did not have 2A at all. Okay. Then they introduced 2A. But the two-way reports were completely different, meaning I was downloading I would get something, the department was downloading, they were getting something else. I downloaded after 3 months the same report, I was getting something totally different. The auto-populated numbers in my GSTR 9 was completely different. Okay, then they introduced a scheme, rules 36.4, where they said, okay, whatever is appearing in your GSTR 2A, add 20% to that and you will get that much amount of credit. Then they said, no, 20% is very high, so we'll make it 10%. Then they said 10% also very high, make it 5%. And then at one fine day, they said, whatever is appearing in a 2A, only that you can take credit. Then they said, no, not 2A. Whatever is appearing in 2B, only that you can take the credit. So currently, the stand is that whatever is appearing in 2B, not stand, the law is that whatever is appearing in GSTR 2B is the credit which I am entitled to claim. Okay, but there are a lot of audits, the assessments, the inspections which are happening where the authorities say that you have claimed credit of 1 crore in your GST returns. Okay, maybe monthly or for the entire year. But the credit available to you based on the GSTR 2A or GSTR 2B report, depending on the period which we are talking about, is only 90 lakhs. So please reverse the credit to the extent of 10 lakh rupees. So their circular 183 was issued, which said for the first 2 years, there was no mechanism of 2A. That means they acknowledged that there was no 2A. Okay. There, to the extent of credit available in your GSTR 2A, you're entitled to take the credit. Any credit more than GSTR 2A, if it is vendor wise less than 5 lakh rupees, you give a declaration that the vendor will give a declaration to you that he has paid the tax, but there is some error in his filing, so it is not appearing in your GSTR 2A. But if vendor wise the amount is more than 5 lakh rupees, ask your vendor to get a CA certificate where the CA will certify that the vendor has actually paid the tax, but during reporting he has missed, either given the wrong GSTIN or shown it in B2C or something like that, whatever error has happened. So basically the government has received the money. That is what circular 183 said. Okay. Then there was a High Court judgment which said that why this circular benefit has to be restricted only to 1718 and 1819, it has to be extended to 1920 as well. Okay. Now in the GST Council recently they have discussed that they will extend this benefit to December 31, 2021. I don't see it as a benefit. I see it as more as a restriction. But let's look at what is the so-called benefit which the government is trying to give. So what government is trying to do is they have broken down the periods into the they have broken down the provisions of the law between different periods. So they said first of July 2017 to 31st March 2019. I have already covered in circular 183. So do whatever is mentioned in circular 183. That is difference between 2A and 3B. Give the CA certificate or self declaration. Okay. From 1st April 2019 to October 8, 2019, the provisions were same as 17, 18, 18, 19. So follow the same thing. Whatever is appearing in 2A, claim the credit, and whatever is not appearing in 2A, give me the CA certificate. Okay. Come first from October 9, 2019, which is when Rule 36.4 was introduced. Okay. Now you will be able to claim the credit to the extent of what is appearing in 2A plus the 20%, subject to a condition that for the 20% which you have claimed extra, which is not appearing in 2A, you have to give me either a self-declaration or you have to give me a CA certificate, what I have mentioned in Circular 183. Then from 1st January 20 to 31st December 20, that limit was reduced to 10%. So you will get credit of 2A, what was appearing in 2A, plus anything additional up to 10%. Okay, you will have to give me the CA certificate or the declaration. Likewise for the 5%. The circular now also says that assuming my credit was 1 lakh rupees in my GSTR 2A, okay, and I was supposed to claim 20% extra, so 1,20,000 rupees. Okay, I'm sorry, we'll take an example only. Okay, we are taking an example where the credit available was under 36.4 was 10% more than 2A. So let's look at this example. Okay, so in my 2A, the credit available is 2 lakh rupees. The credit available as per my books is 3 lakh rupees. That means 1 lakh worth of credit the vendors have not uploaded. Okay. Now what does Rule 36.4 says? Whatever is appearing in 2A, you increase that by 10%. So I take additional 10% credit. So what is the credit I can take? Though the eligibility is 3 lakh, the credit which I can take is 2,20,000 rupees. Now what the circular says is 2 lakh you have taken as per 2A, no additional documents required. Already 16.2 has a list of documents which are required to be given, conditions to be satisfied. So additionally, I don't want anything from you. Okay, because GSTR 2A is in GSTR 2A disappearing. For the additional 20,000 which you have claimed, okay, give me a declaration from the vendor or from the chartered accountant, depending on the quantum. Then in your books it was 3 lakh rupees. 2,20,000 I have either GSTR 2A or self certification or CS certificate. Balance 8,000, 80,000 you are not entitled to claim the credit at all. So what was not there in the GST law, okay, is indirectly being introduced into the GST law by saying 2A 3B was mandatory from 1718 onwards. Okay, though there was no specific provision around it, right? Okay. Now the issue here comes is, okay, I have 2 lakh credit, 20,000 extra I have claimed. Now, should I look at it monthly? Should I look at it annually? Should I look at it vendor wise? From which vendor I should get certificate? So should I match it vendor wise or should I match it in total? These answers, I think, these questions cannot have a standard answer. Situation wise, we will have to look at what are the issue we are facing. If we have only 2 vendors, then it has to be vendor wise only. If we have 500 vendors, it might be very difficult to get vendor wise details. So how do you get a declaration then from the vendor? So that will become very, very challenging. So we'll have to see how the authorities are going to implement this circular. Okay. Now, currently what we have seen, just a minute, let's currently what we have seen in the month of April, my GSTR 3B is 1 crore and GSTR 2A credit which I've claimed is only 50 lakhs. So what I will do, I will claim the credit in the next month, May. May I have claimed 50 lakhs of the last month and assuming 1 crore of the current month also. But 2A is only 1 crore. So 3B is 1 crore plus 50 lakhs of last month and 50. I have got the credit in my GSTR 2B of only 1 crore. So officer is ignoring April and straight away issuing notice for May saying that you have claimed 50 lakhs excess credit. Please reverse the same. Okay, so how do we deal with this? Will have to be decided on situation to situation basis. But only point what I'm trying to make here is to the extent of the 2010-5, we have some relief. Beyond that, we will have to challenge that there was no 2A 3B reconciliation required at all. The law was specifically amended, is being amended now to say that only when the supplier furnishes his return and the credit appears in the statement which will be made available to me online, then the credit is eligible. That's when the legal sanctity is given to this entire 2A 3B discussion. Then for the earlier period, how can you retrospectively ask me to match 2A 3B based on a circular? Should be our argument. Next. If you observe, we are skipping some circulars. So we were at 192, then 193, 194 is missing. Not because we don't know about it. It is because it's very simple and may not have a widespread impact. So that's why we are not covering that as of now. But at the later stage of our presentation, we will be covering those circulars as well. Okay, very interesting circular. Okay, circular 195. Now, actually, the GST law is being made using circulars. We don't require GST law now. We require only circulars. We have to read only circulars. Okay. So what it is trying to say is that if there are any warranty supplies which are being made to the customer, okay, then those can be made by the manufacturer or by the distributor. Okay, so there can be somebody in between the supply chain, or there can be directly a manufacturer who is sending the warranty supplies to the customer. Okay, so assuming I am purchasing something directly from Flipkart through Flipkart, where the manufacturer himself is selling, okay, and there is some warranty related requirement, then the manufacturer is going to replace the part, component, or the entire goods. Okay, or if I go to a store, then distributor is going to replace the defective part and maybe then claim it from the manufacturer. In all these cases, the issue was based on the recent judgment of the Supreme Court referring to the Mohammed Ikram case. They said there is a supply between the manufacturer and the distributor. So distributor is required to raise the invoice on manufacturer for the warranty supplies. To provide clarity in GST as far as GST is concerned, because that was more from a bad perspective. Okay, they have broken down the circular into different situations. Where they said first, manufacturer gives replacement of goods or some spares to the customer under warranty period where he's not charging anything extra. Okay, in that case, the circular says the manufacturer would have already factored the cost of replacement into his selling price. So out of that cost which is factored, on which he has already paid the tax, he is giving out the spares. So there is no additional supply between the manufacturer and the customer. You are not required to pay GST on this warranty spares. Okay. Plus, because the cost is already factored in, we cannot say that something is being given free of cost to the customer. So you are not required to reverse the input tax credit as well. Okay, so this is between two persons, manufacturer and the customer. They say no impact on GST. You freely give the part to him or the entire goods to him. No need to pay output tax. No need to reverse the input tax credit. Okay. Now let's look at the next situation slowly. Okay, because there are three parties here and there are different permutation and combination. Now what is happening here originally? Manufacturer sells the goods to the distributor. Distributor sells the goods to the customer. Customer comes back to the distributor and says this product is not working the way it is supposed to work. Distributor says one part of the entire product is not working. Because the product is under warranty, I will replace it for you free of cost. If he charges, of course it is liable to tax. Okay, but we are talking about all the situations where there is no charge on the customer. Okay, so distributor, based on his agreement with the manufacturer, where the manufacturer said don't call me for warranty supplies every time, you please take care of the warranty supply. So now what distributor does, he already had the stock with him because he had purchased it from the manufacturer. Okay, because not just for warranty, even for repairs beyond warranty I might require those spares, so I have it in my stock. Or manufacturer does not give the stock, but I have some third party from whom I have purchased. So basically it is in my stock. Whether I buy it from my third party or from a manufacturer, it is available in my stock. When the customer comes crying saying this product is not working for me, I will either from my own stock or from the third party stock, basically what is available with me, I will replace the part and give it to him free of cost. Okay. Again, because it is free of cost and between distributor and customer, I cannot charge anything. No need to pay GST. But why will a distributor give something free of cost to the customer for the obligation of the manufacturer? So now what distributor will do? Distributor will say, look, your obligation I have fulfilled. Correct? Your obligation I have fulfilled. So now I will raise an invoice for whatever stock I have given. Who is going to pay me money? So I am going to raise an invoice on you. When the distributor raises invoice on the manufacturer, he will charge the tax and the manufacturer will be able to claim the input tax credit of the same. Or we've seen a lot in a lot of what is a supply chain where the manufacturer says, I will give you a credit note to the extent of the stock which has been used by you for warranties. Okay, in this case, the value of the supply itself gets altered because a credit note is being issued. The manufacturer reduces his output tax. The distributor will have to reverse that much amount of input tax credit because he is getting that money through a credit note. So if you look at the circular, there are too many situations which have been covered. Basically, it boils down to two, depending on what the distributor and manufacturer are discussing. If distributor is allowed to raise the invoice, ask him to raise the invoice, manufacturer gets the credit. If manufacturer says, no, I am going to give you credit note, then distributor accepts this credit note, his payable to the manufacturer reduces, the credit to the extent of 18 rupees on that 100 rupees of spares, he will not be able to claim because manufacturer is going to give him deduction to that extent. Right? So that is the sum and substance of all the warranties where there is no charge. If there is charge, on the charge GST will be applicable depending on if it is goods, the rate of tax on goods. If it is labor charges, there will be 18%. Right? Okay. Next, we have successfully skipped one more circular. Now we go to circular number 197. Okay. Now what does circular 197 say? They say we know in refunds there are a lot of issues, but we will ignore all those issues and focus on only three important points which we want to focus on. Okay. One, earlier the refund was being given based on GSTR 2A. Now I have changed it to GSTR 2B. So the refunds will be sanctioned based on whether the invoice is appearing in GSTR 2B or not. But if I've already sanctioned refund from 1st January 2022 based on 2A, I will not touch those orders. Those orders are final, so close that. No problem. But if you apply for refund today for 1st January 2022 onwards, then the refund will be granted depending on whether that invoice on which you want to claim refund, okay, of the vendor is appearing in your GSTR 2B or not. That is point number one. Point number two, in the rules, they had made an amendment as far as export of goods was concerned as to what do you mean by export of goods. They said it will be equal to FOB value or the value declared in the invoice, whichever is less. This is a excise hangover which they have in GST. There is nothing called as FOB value. In excise and customs, we had refunds being processed based on FOB. So I'm sure this rule is going to be challenged, but as of now, still it is not challenged. FOB value or value declared in the invoice, whichever is less, will be the value of exports. But there was some issue in the formula. Okay, numerator said whichever is less, but denominator was not changed. So now they are clarifying that whatever has to be taken in the numerator, the same amount will have to be taken in the denominator as far as export of goods is concerned. So let's take an example. If my invoice value was 100 and the FOB was 19, then the export computation of refund formula was FOB, which is lesser, 90 divided by 100 into 20 rupees of net ITC, which is available to me. So the refund calculation was coming to 18. They realized that this is not correct because whatever is then in the numerator should be the same which should appear in the denominator also. So I said denominator also will be FOB or value declared in the invoice, whichever is less. So 90 divided by 90 gets knocked off, multiplied by 20, you will get full refund. This does not mean in this revised formula always you will get full refund. That means in our example you will get full refund because if you have domestic supplies, that will also get added to the denominator, and to that extent you will not be able to get the refund. Right. Third, now there will be situations where I have not been able to export the goods within 3 months of raising the invoice. If you strictly look at the regulations of GST law, if you look at the LUT which has been executed by you, it very clearly says that if you don't export the goods within 3 months, you are required to pay the tax. If you don't receive the money for export of services in foreign currency within 1 year from the date of invoice, then you are required to pay the tax. What if you have paid the tax along with interest, but subsequently you are able to export the goods or subsequently you are able to realize the money? There the circular says that if you are able to subsequently export the goods or realize the money, you have satisfied all the conditions, though subsequently, whatever taxes have been paid by you on all these transactions which were treated as export, you will get the refund of those taxes. Okay, but interest, please forget it. I like my interest, so please don't ask me for the interest. Okay, now one or two things which I would like to highlight, which is obvious of course, but just want to highlight. This is applicable only for export of goods or services without payment of tax. In with payment of tax, you have already paid the tax. Okay, so these within 3 months and within 1 year does not come into picture at all. Okay, so these provisions are applicable only for export without payment of tax, where you have crossed these time periods, but you have not been able to satisfy certain conditions. What you will do, you will pay the tax along with interest. Once you have satisfied the conditions, you will get back the tax, but you have to forget the interest. Okay, now generally what will happen? I have not realized the money. The audit officer has not come to my doorsteps, so I have not paid the tax. Okay, and even before the audit commences, but after 1 year, I have already received the money. So I received the money after 2 years. The audit officer now comes after 3 years, okay, and says, yeah, I think somebody said that I'm very fast. I'm sorry for that. I will be a little slow. Okay. So somebody says, uh, I'm sorry, I just lost the flow. I'll repeat again for myself. Uh, One, I exported services. I did not get the money within 1 year time. I got the money after 2 years. And after 3 years, the audit was initiated. The officer said, please give me a reconciliation of invoice with FIRC. He saw that there is a gap between invoice and FIRC to the extent of 2 years. He says, why have you not paid the tax? I will say, sir, if I would have already paid the tax based on the circular, I would have got the refund. So what is the point of paying tax and claiming refund? He will say, very good. Though I don't agree with you, you pay the tax. But if he's a good officer, he'll say, okay, okay, very good. You've not paid the tax. You are supposed to get the refund. Very nice. Chapter close. But he will at least ask you for interest for delay in realization of forex for 1 year. So that interest will be a cost to you if you are not able to realize the money within the given due date. Right? Okay. We'll go to the next circular. Circular 199. The most important, I'll not say important, but the most debated issue. So many issues around it. 16.1. 16.1 says the taxpayer will be entitled to take the credit of tax charged to him used in the course or furtherance of his business. You know how the officers were reading it? They said, you are head office in Bangalore. You have incurred expenditure for Bangalore and your branch office Maharashtra of audit fees of 1 lakh rupees, on which GST is 18,000 rupees. So the invoice is 18,000 rupees, which is a tax charged on him, but not used in his course of business, because to the extent of turnover of Maharashtra, it is not used by Bangalore in their business. So to the extent of Maharashtra turnover, please reverse the credit. That was one type of notice. Type 2 notice, you have claimed the entire credit in Bangalore, which should have been moved to Maharashtra. You have not followed ISD procedure. So please reverse the credit because you have not followed ISD procedure, and penalty around it. Third type of notice, you have given corporate services to or head office services to your branch, but you have not cross charged. So you have not paid output tax. Please pay output tax on the same. So these were the three issues which were coming up depending on what the officers thought right. Okay. Now the circular says, I want to eliminate all these issues. So let me bring in two new concepts which are not there in the GST law. Okay, two new concepts. One, third party cost. Second, internally generated cost. Okay, what do you mean by third party cost? Wherever I have incurred expenses through a third party, okay, different GSTIN. Okay, that is a third party cost. Internal generated cost. I have a HR team in Bangalore who is doing interview for recruitment in Mumbai. Is an internally generated cost. Okay, I have a director sitting here who is going to decide whether in Mumbai the office should be taken in central Mumbai or southern Mumbai. I don't even know the geography of Mumbai, just giving an example. Okay, so now where should I take the office? So director time is spent on all these decisions. So now they have said we will bifurcate these costs into two: third party cost and internal generated cost. Now what do we do this with this third party cost? With the third party cost, okay, you can take the credit. So that 16.1 issue of him and his result, head office can take full credit. Now head office can transfer this credit under ISD, but that is optional. Very, very important. They have said ISD is optional. They're using the word is. And now if you go to the GST Council press release, they said ISD will be made mandatory, but for that GST laws will be amended. As of now, GST laws have not been amended. Till the GST laws are not amended, ISD remains optional. Okay, what do we do? We'll come to that a little later. But once the GST law is amended, ISD will become mandatory. That means all the third party cost will have to be transferred to the other entity through ISD only. So that means if I'm receiving auditor services for my Bangalore in my Bangalore head office, okay, and I have an office in Mumbai also. Based on the turnover of Bangalore and Mumbai, assuming Bangalore has a turnover of 80 and Mumbai has a turnover of 20, okay, whatever is the credit which my auditor is transferring to me by way of his invoice, 80% will have to be retained in Bangalore and 20% in Mumbai. And when I say retain, it is not retained by transferring through ITC 02. Bangalore will have to take a separate GST registration under category ISD. He will have to give that or communicate that to the vendor in his purchase order. The vendor will upload the invoice in ISD. Now ISD registration will raise two invoices, one to Bangalore, one to Mumbai. 80% of the credit will be transferred to Bangalore, 20% to Mumbai. Okay. Look at the situation from a SEZ and non-SEZ perspective. I have a SEZ office and I have a non-SEZ office both in Bangalore. Of course, my head office is going to be non-SEZ because in SEZ I am not permitted to do anything other than the authorized operation. Okay, so the auditor charges me tax and gives me a ISD invoice. Okay, if my auditor would have raised the invoice directly on the SEZ, no tax because it is zero rate supply. But now what will happen? The the auditor is going to raise an invoice on ISD which does not have a SEZ tag. Okay, ISD is not someone who is, supplying services. His work is only distribution. So whatever he gets, 80 he will transfer to the non-SEZ business, 20 he will transfer to the SEZ business with input tax credit. And what if the auditor and my non-SEZ and SEZ all three are in Bangalore? Now SEZ output is IGST, but the credit which will appear is CGST, SGST. One, what the SEZ will do with that credit. Second, I am not sure if the returns, especially GSTR 9, have been tuned in such a way that I can show CGST, SGST credit, because I saw in one of the cases, if you look at GSTR 9, table 8, the credit appearing for SEZ, though if I download the 2A CGST, SGST is there. But in table 8, which is auto-populated, the credit appearing was 0 in CGST and SGST. So we'll have to deal with this new animal now. Okay, but this will be an issue for the SEZ units as far as third-party costs are concerned. Okay, now only when it becomes mandatory. Okay, but it also says ISD is optional. So HO can, instead of transferring the credit through ISD, can raise an invoice on branch office. BO is branch office. Okay, but one very important thing which they do, and we have also seen this practice of credit shopping. Now, what do you mean by credit shopping? It means I have a branch in Delhi and I have a branch in Mumbai. Okay, Mumbai I have huge amount of input tax credit. Delhi I am required to pay tax in cash. Okay? And Bangalore I have huge amount of credit. So instead of that invoice which had to be split into three parts, say Bangalore was 50, Bombay was 40, and Delhi was 10. What will Bombay do with this credit? Already in this month they have a huge amount of credit. So what I will do, I'll split the invoice into 50 Bangalore, 50 Delhi, and transfer the entire credit to Delhi. Here, what the circular is trying to say is, if the service is specifically to one branch office, then you cannot transfer the credit of that invoice by way of a cross charge to another branch office. That's what it is trying to say. So you cannot shop for the credit and transfer it the way you want through based on your convenience. Okay. Now, this is when it is optional. When it is mandatory, we'll have to route it through ISD, like I said. Okay. Now, as far as internally generated costs are concerned, okay, what it's trying to say is director salary, head office rent, okay, or bank processing fee, etc. If the branch office is able to claim the full credit, okay, then go by proviso to rule 28, which says whatever is mentioned on the invoice will be open market value. So you have valued at 1 lakh, very good, 1 lakh. If you have valued at 1 crore, no problem. If you have valued all the cost and added 10% and transferred, very good. Whatever you have done, perfect. You have not done anything. That nothing is the deemed value. Don't do anything at all, right? So that is the circular. That is what the circular clarifies. So cross charge. If anybody has got notice, show the circular, get the issue dropped. As long as the other party, that is branch office, is able to claim the credit. Okay. Now the issue which has been, the first AR, the most popular AR, not the first AR, the most popular AR in 1780 was Columbia Asia. Who can forget that? Where the hospital had actually asked whether the salary cost also has to be added for the purpose of cross-charging the cost to my branch office. And the Karnataka AR and then the AAA AR said, yes, even the salary cost has to be added. The circular now specifically says that salary cost is not required to be added, whether it is in cases where credit is available or credit is not available. But unfortunately, they have not given the logic why salary is not required to be added. I would think They have said salary is not required to be added because two reasons. One, employee is employee of the company and not of one particular branch. Okay. And second, maybe because salary is anyways part of Schedule 3. Okay. So you don't have to add taxes on that. Okay. Maybe, I'm not sure. But that leaves field open for a lot of other costs on which I don't pay GST. What about electricity on head office? What about depreciation charged on capital goods? What about interest what I pay, okay, to my bank? Now, should I add it or should I not add it? Especially when credit is not available. See, credit is available, whatever I charge on the invoice is deemed to be the open market value. When the credit is not available, what do I do with this cost which I have got, which does not have any GST component? Okay, so that we will have to navigate through and find out a solution. But as of now, I would think a lot of issues around this cross charge between distinct persons are resolved based on the circular. Again, now, if you look at Schedule 1, it talks about distinct persons and related parties. Okay, so if I have a corporate office which has a HR function for the entire company, because I want salaries to remain the same, I want the HR policies to remain the same, I want the uniform policies implemented for the entire group. So I have a single HR, okay, team which is sitting in my group company, and I have subsidiaries in the same state. Now, whether the same circular will apply or not is a big question now, because 199 has been clearly issued for distinct persons and not related parties. So that is something which we might be able to draw inferences, but it will not apply specifically to related parties, right? Okay, next. There are a few other circulars which we missed. Okay, not that they are not very important, but maybe in certain cases there is not much to discuss. But circular 196 is a blessing in disguise. There was no point at all with the audit authorities. They would say that if holding company has invested money in the subsidiary company, they are providing services to the subsidiary company. Okay, luckily circular has come on time, because all these matters were either at audit observation level, AD202 level, or DRC01 level, or show cause notice level. Okay, so luckily the circular has come which says when holding company buys the shares of a subsidiary company, it is a transaction in securities which is not liable to tax. But very importantly, this circular says merely because there is an entry in the HSN code, it does not mean it becomes taxable. That reminds me of our excise days, where in excise they said merely because goods are mentioned in the excise tariff, it cannot be made liable to tax. You have to prove that the goods have been manufactured. Only then excise duty is applicable. Likewise, even in GST, you will have to prove that there is an underlying supply. And only when there is an underlying supply, GST will be applicable. Otherwise, GST will not be applicable merely because there is a HSN code for it. Okay. But for some strange reason, they have not clarified on corporate guarantees and director guarantees. Okay, so that we'll have to wait and watch what will be the fate for that. Maybe two ways of looking at it. One, they thought it is taxable, or second, they thought there's no dispute at all, it is not liable to tax at all. We don't know which course this issue is going to take. We'll have to wait and watch and litigate till that time. Okay, circular 198, very self-explanatory. If government bodies have taken GST registration for deduction of TDS under section 51, they are allotted regular GST number only, though they have obtained only for TDS purposes. But if the supplier is required to generate invoices electronically, okay, the limit is going to be reduced from 1st August to 5 crores. Okay, if he is required to generate the invoice electronically, then even for these government bodies where they have taken registration only for TDS purposes, the invoice will have to be generated electronically. Right? Okay, next. Now, there are two issues which the GST Council discussed. It is appearing in the press release, but circulars have not been issued. What are those two issues? Point number one, RCM on director services. So any remuneration to director, the officer would say, you have paid this remuneration to the director, you are required to pay tax under reverse charge mechanism. It could be director is working as a consultant also. Okay, director is getting sitting fees also. Director is given his commercial property and rent to the company. So he could give variety of services, but the authority will say he is a director of the company. Services by director to the body corporate is liable to tax under reverse charge mechanism. So please pay taxes under reverse charge mechanism on all these services. Okay. Now the circular has come. Circular has not come. Sorry, press release has come, which says as long as these services are in the personal capacity of the director, no RCM will apply. If it is in the capacity of the director, then RCM will apply. Okay, so let's look at an example. Okay, if we are paying sitting fees to the director, it is being paid because he is working in his capacity as a director. So company will have to discharge tax under reverse charge mechanism. Okay, but he has given his commercial property, and I want to stress on commercial property here because we'll come to residential property a little later. If he has given the commercial property on rent, he is not acting in his capacity as a director, but he is acting in his capacity as a landowner. Okay, in this case, GST is not required to be paid under reverse charge mechanism. Okay, next, if he is an executive director who is getting salary, he is getting the salary in his capacity as a director only. But the point is covered under Schedule 3. So there's already a circular which was issued on this as well, that on Schedule 3 transactions, even if transaction is liable to tax under RCM, the rate of tax will be zero because it is not treated as supply of goods or services. So salary to director, Schedule 3, no tax. Sitting fees to director, RCM. Commercial property given on rent by the director, forward charge, depending on whether he is a registered person or not. Okay. Renting of immovable property, which is residential in nature. Last year, there was a new entry which was added to the reverse charge mechanism notification where they said renting of immovable property for renting of residential property, okay, whether or not for residential purposes, given to a registered person will be liable to tax under reverse charge mechanism. So whether you use that residential property for residential or commercial purposes or use it for a guest house, if you are taking it from a director or from a third party, whoever it is, it will be liable to tax under reverse charge mechanism only. Okay. Then the food and beverages supplied in cinema hall. Okay. They've said there will be a circular which will be issued to clarify that they will be treated as restaurant and they will have to pay tax at the rate of 5%. But if it is merged along with the movie ticket and sold as a combo, so ticket plus a samosa, a popcorn and cool drinks is given as a combo, then if it satisfies all the conditions of a composite supply, then the rate of tax applicable on the tickets will also apply to the entire combo and the rate of tax is going to be 18%. Now, where was the issue that supply of food and beverages in cinema should not be treated as restaurant? I am actually not sure as of now, but let's wait for the circular and the logic behind that. Right? Okay. Now, these were all relating to circulars, which can be issued by the government immediately. But now let's look at certain recommendations which will require change in either the GST Act itself or in the GST rules or in the GST forms or the notifications. Okay. One, recommendations relating to law. So this is a rate change notification. There was an issue whether the clearance of that SUVs, okay, utility vehicles, should be when all the people are sitting or when nobody is sitting. Okay, so when nobody is sitting, the car will be elevated a little up. But if all of us are sitting, then the car will be a little down. So how do you measure? That was one big issue. They said when nobody is sitting, what is the height? Based on that, compensation will be applicable. Right? Okay. Then place of supply of goods to URD. This is a new entry. They said they will amend section 10 to introduce a new section to clarify on how to determine the place of supply as far as URD is concerned. My guess is that they are going to say the place where the sale takes place. Maybe if Karnataka, within Karnataka, if URD takes place, okay, the tax should go to Karnataka government is how they are going to clarify, but they have not told anything in the recommendations or the press release. So we'll have to wait and watch for this new section 10 in the IGST Act. Okay, this was uh, a known a known thing, but not many would want who wanted this because okay, the implications are very high. Okay, so a big show cause notice was issued on one of the gaming companies that you are required to pay 28% on the entire value of money collected by you. Okay, so that became the biggest show cause notice ever. Okay, in the history of the indirect tax laws. Recently, just last month or 2 months back, the Karnataka High Court said no, the online gaming companies are only a platform, so they are required to pay GST only on the platform fee. They call it as a rake. Okay, only on the platform fee. And because these are game of skills, the rate of tax is 18%. So there are two things which was issued here. One, whether GST has to be collected on the full money value collected or only on the rake, which is the income of the platform. Okay. And second, whether the rate of tax is 28% or 18%. Okay, I'll just ask my friend to, Mansa to just move the screen. Okay, she's helping me with the PPT today. So if you observe here, there's a present and there's a future. Okay, present is what is happening today. Once the law gets changed, maybe we are assuming that this is what is going to happen. So let's look at player 1 and player 2. Both deposit 100 rupees because they want to play a game of rummy. Okay. By the way, rummy is not gambling, is what a lot of courts have said. It is a game of skill, right? So the bet value totally comes to 200 rupees. The platform, assuming, wants to make a 10% margin on this. So they take a platform fee of 20 rupees. And on that, they will discharge tax under reverse under inclusive method. So that 20 is including GST. So what is the income of the platform? It is 16 rupees 95 paise. Okay. So 20 rupees of that 16 rupees 95 paise goes to the platform and 3 rupees goes to the government. The balance available with the platform is 180 rupees. So if assuming A wins the game, okay, A gets back 180 rupees. So he had invested 100 rupees. He gets back 180 rupees. So he gets 80 rupees. Now there is a income tax TDS, okay, of 30%. I don't know whether there is a surcharge or whatever on this, but assuming that it is only 30%. So he invested 100, he got 180. So his net income from that game is 80 rupees. A TDS of 30% will be deducted, 24, deposited in his account, and he will be able to withdraw 56 rupees. Okay. Now what government is proposing is that bet value is 200 rupees. Now you don't pay tax on 16 rupees 95 paise. You are required to pay GST on the bet value. And I am assuming that that bet value will be treated as inclusive of tax. In lottery, you will not believe the GST is required to be paid on the lottery sold or the prize money, whichever is higher. So if somebody is not issued that much amount of lottery, still I will have to pay tax on the value of the value of the prize money. The method could be inclusive also, exclusive also. I am assuming as of today that the value is inclusive. So that means 43 rupees 75 paise goes to the government, which means 43.75 rupees is not available to the player basically. Okay. And assuming for some reason platform wants to make same amount of money, 16.95 earlier also, 16.595 here also. So now amount available to winner from 180 straight away reduces to 39.30. That means his cash withdrawal from 56 effectively comes down to 27 rupees 51 paise or 28 rupees. Okay. So that is the recommendation of the GST Council, that we will have to amend Schedule 3 to say that actionable claims excludes online gaming, casinos, and horse racing. Then amend the GST rules to bring in another rule under the valuation apart from rule 31A, which is already there, and say on online gaming also on the bet value GST is required to be discharged at the rate of 28%. Okay. Next. Few other compliance related changes. GTA was allowed to pay taxes under forward charge or under reverse charge. If he wants to opt for payment of tax under forward charge, he had to make a declaration. That was an annual declaration. A lot of people complain that how can why do we have to follow this procedure? As long as I want to be under forward charge, let me be under forward charge. Whenever I want to go under reverse charge, I will give you the declaration. So that was accepted. So now once you file a declaration for forward charge, you can continue that till you don't file another form to say I want to from next year pay taxes under reverse charge mechanism. And earlier this facility was available only till 15th of March. Now it will be available from 1st January to 31st of March. So assuming in 24-25, I want to change the option from forward charge to reverse charge. Then from 1st January 23 to 31st of March 23, I have the facility to file that option online and convert myself to RCM from 1st of April 2023. Okay. Now, there are a lot of relaxations in the tables relating to GSTR 9 and 9C in 21-22. Council has recommended that those relaxations will continue even in 22 and 23. Then, if my turnover is up to 2 crores, no need to file GSTR 9. No clarification, at least in the press release, as far as this 9C not applicable to turnover less than 5 crores, but I'm sure that exemption is also going to continue. Okay. Then e-commerce operators or OIDs had a issue. B2C recipients, as per the invoicing requirement, they have to give full address of the recipient. In certain cases, they said no, as long as state of the recipient is mentioned, that is more than sufficient. Then tran credit, there is an issue where the orders are being issued for rejection of credit. The assessees or the taxpayers are not able to file the appeal, so there will be some changes made in the procedural aspects so that they allow filing of appeals manually as well. Then there are a lot of benefits or amnesty scheme, as the government called, which were available till 30th June for say non-filing of composition scheme returns, for non-filing of annual returns where the penalty was very high now because it was a per day penalty, or I have not filed the final return, though the registration is cancelled, or I have my registration has been cancelled, but I'm not applied for revocation, or I did not file my return. So officer has passed a deemed assessment order and I have not filed my returns within 30 days of that order. So all those cases where assessees were actually facing a lot of issue and there was no, remedy in the form of appeal, they said we are going to extend the due date to 31st of August 2023. So they have extended the due date. Sorry, that appears to be 31st of July. It is actually 30th June 2023. It's got extended to 31st of August 2023. The extended date is correct, but the earlier date, please read as 30th June 2023. When we circulate the PPT, then we'll change that and share it with you. Next. So some forms have been changed. So now I think DRC 01A is there, 1B is there. Now we have C also, we have D also. So the lot of issues around this DRC 1A and 1B, wherever there is a mismatch between GSTR 1 and 3B, government is or the authorities are issuing the notices saying why is there a mismatch between 1 and 3B. If you don't reply, or if you reply but I'm not happy with your reply, I will be able to recover that money. Now, how will they recover the money? Okay, so manner of that recovery is going to be prescribed by way of DRC 1D. So we'll have to wait for that form. Then if there is a mismatch between 2B and 3B, then system-based intimation is going to be issued in 1C. So we will have new notices coming our way once these are part of the GST rules. Then if you have not filed GSTR 9 within the due date, then notice under GSTR 3A will be issued. Very interesting. If suppose I have taken a subscription of LinkedIn, okay, and I've given my GST number. So LinkedIn is a OIDR, they will not charge me tax. But the government or the GST authorities were not able to identify expenses on which I was required to pay tax under reverse charge mechanism. Because when I'm dealing with the OIDR, if OIDR is rendering services to B2C, he has to pay tax. But if he's rendering services to B2C, it is import of services on which the recipient is required to pay tax under reverse charge mechanism. So now they are going to amend that return to ensure that when OIDR is required to file his returns and he's rendering services to a registered person, then he will have to capture the GST number. The OIDR will have to capture the GST number and file the return. Maybe it will appear in my 2B as transactions which are liable to tax under reverse charge mechanism. Like all the other reverse charge mechanism, I think this also will get auto-populated. Even if it does not get auto-populated, the authorities have this data, and based on that, they will be able to ask me if I have paid or discharged the tax under reverse charge mechanism or not. Okay. So this is all I had. Exactly 6 o'clock. Okay, though we started 5 or 10 minutes late, I'm sorry if I was a little fast. You will find a QR code. If you are already not part of our GST community, please scan this and you will get added to the GST community. The objective is to disseminate information among industry persons. So I'm sure a lot of chartered accountant friends of mine are also attending, but not required. Whatever you get in other WhatsApp groups, you will get the same forward, other than good morning messages. But I encourage the industry members to join this community, right? And we will be sharing all the GST related updates as and when it happens. So this is what I had to share with all of you. You can post all your questions in the chat box and I'll be more than happy to take those questions one by one. I can see a few questions here. I will take those one by one. Shashi is asking whether meeting started. It is over, Shashi. I can see a few questions. Yeah, somebody is asked, can you please repeat SEZ situation? I am assuming they are talking about that ISD situation. Okay, so assuming I have a head office in Bangalore, okay, which is a non-SEZ, and I have another branch with GST, which is a SEZ, and GST losses, you have to take a mandatory separate registration for the SEZ. Okay, now I have taken auditor services from my chartered accountant. There's a common services for both non-SZ and SZ registration. So I will take the invoice in ISD registration and distribute the credit between non-SZ registration and SZ registration in the turnover of non-SZ and SZ. Now, what will SZ do with that credit is the question. Okay. Rahul has another question. What about interest-free loans given by holding to subsidiary? So like I said, as of now, they have only clarified on holding subsidiary relationship. All these issues which are being taken up by GST authorities during their audit have not been addressed. I don't think it is liable to tax. Okay. Now, what they're saying, interest anyways is tax free. Okay. They are saying if you would have taken the money from the bank would have charged a processing fee, which is generally 1 or 2%. So loan value multiplied by 1 or 2% multiplied by 18% is the value of service. I don't think that is correct. Okay, so I don't think it is liable to tax. But whether circular addresses that situation, I'm sorry. As of now, that circular does not cover that situation. Okay, Naveen is asking, what about whole-time directors? Naveen, again, whole-time directors are executive directors. So if you are paying them salary, no need to pay GST. Okay. Now, how do I know whether I'm paying salary? Under which section of income tax are you deducting TDS? That's what the circular says. If it is under 192, that means you're treating them as employees. Whatever you pay to them is covered under Schedule 3, no need to pay tax. But if you're deducting tax under 194J and he's working in his capacity as a director, it will be liable to tax under reverse charge mechanism. Then valuation in case of real estate developer for cross charges after. Mr. Jaikumar has a very interesting question. Valuation in case of real estate developer for cross charge after 1/4/2019. The reason why he's asking this question is after 1/4/2019, if any projects are launched or if there is an ongoing project where I shift to 5%, I'm not entitled to input tax credit. So Jaikumar sir, then you will fall under that input tax credit not available. So salary cost you can remove, but all the other costs you will have to factor and raise an invoice on your branch offices. My dear friend Sunil has a very interesting question. RCM is applicable on any reimbursement made to director whom we are also paying sitting fees also. Now, is it a question or a statement, Mr. Sunil? I think it is a question. He's asking whether reimbursement to director to whom we are paying sitting fees is also liable to tax under reverse charge mechanism. Point is, see, if that expense is incidental to the officer, sorry, the director coming and attending the meeting. So you attend the meeting and conveyance also you are claiming. Then it is a single service where you're broken up into 50,000 is sitting fees and 5,000 is cab charges, liable to tax under reverse charge mechanism. But director is spending some money on behalf of the company, not at all related to sitting fees. Okay. Then if you go to the valuation rules says expenses have to be added to the value of supply, but there is no value of supply itself. Pure reimbursement of cost not relating to sitting fee is reimbursement of expenses cannot be made liable to tax. Okay. Then I have one. Says, can circular number 195 can be taken as a reference for pharmaceutical companies replacing expired medicine? And sorry, Pawan, there is already a circular for pharma companies as far as expired medicine is concerned. Manufacturers are replacing product. Here you are not replacing product. You are, replacing that entire medicine itself because it is expired. The earlier circular, my memory fails me in recollecting the circular number. But if you can ping me on my WhatsApp, I will definitely get back to you on the circular. But 195 cannot be used. Okay. In case of cross-charge notice, suppose if we have not distributed to other states, which GST has to be paid? IGST, CGST, or SGST for cross-charge notice? Shashi, this notice, this circular says that even if you have not cross-charged, that 0 rupees is itself deemed value. Okay, but that is in the situation where credit is available to the other person. If credit is not available, it has to be IGST only because the place of supply is the place where the recipient, that is branch, is located. Is CG liable to tax? Corporate guarantee. Like I said, circular does not give an answer. My firm belief it is not liable to tax. So I don't think it is liable to tax, but circular does not talk about anything. Shashi is saying no ISD also raised, no cross charge service. So I think we've covered both the situation. For parent company guarantee valuation at percent, we need TP pay 80%. Can be challenged. 100% it can be challenged. ISD, how to transfer credit from one branch to another branch or from HO to branch as per present law? Please explain again. So very simple. They have said ISD is optional. unless you have taken the IST registration, you will not be required to transfer the credit to your branches. Okay. Santosh will RCM attract on interest paid on director's loan. Interest is not liable to tax. Okay. If you look at notification 12 of 2017, it specifically gives exemption on interest. But what is happening is GST authorities are not asking GST on interest. They are saying you took the loan from director. If you have taken from bank, they would charge you 1% processing fee. On that, you are required to pay the tax. Rahul says, is there any provision to accept the continuation of appeal after 120 days? There are high court judgments which say if the act says that you can accept within 90 plus 30, then 90 plus 30 only. You cannot condone, the officer cannot condone the delay beyond 90 plus 30. Karthik has another question. If there is break in credit ledger balance in a month, that is the case, how interest is. Very good, Karthik. We are also exploring that. So Karthik's question, I believe, is my credit is 1 lakh rupees. Incorrect credit claimed is 50,000 rupees. So I have good balance, no need to pay interest. Suddenly the credit becomes 40,000 rupees. Sorry, there's some noise. Okay. Suddenly the credit becomes 40,000 rupees. So on the 10,000 rupees, I'm required to pay the tax, pay the interest. Then again in the next month it becomes 60,000 rupees. Can I get the interest waiver? Interesting question. But once the credit has dipped, I would think this argument of I am getting the credit, so I'm adjusting future credit against the past transaction will be a little difficult. Circular does not address it, and I also do not have a ready answer. We will have to test it. Shashi says we have received cross charge notice for head office Karnataka taking cross charge has not been into Tamil Nadu and Kerala states. We have paid IGST on the same, but officers are asking to pay CGST, SGST on cross charge. Best no, Shashi. If they're asking to pay CGST, SGST, fight it out. I think what they're asking is my reading of how these issues are being handled is they are saying this credit does not belong to you at all. So that credit you please reverse. So my request is please check the notice whether they're asking you to pay tax on cross charge or they're asking you to reverse the input tax credit. If they're asking you to pay tax on cross charge, which you have already done under IGST, very good case. Please take the notice. Already you have posted 4 questions. Don't be so frustrated. Be happy that they've given a wrong notice to you. Right? Rahul says, so what can we do to challenge? My friend, the law can help only to persons who were awake. 120 days you were sleeping. I am not saying this. Supreme Court is saying this. Okay. Nothing can be done. Try your luck in High Court. Okay. So what can be done? Very difficult to say. Try your luck in High Court. File a writ petition. Maybe you might get a favorable order. Very difficult, but try. Nothing else. Okay. Any other questions? Great. I don't think we have any other questions. Thank you very much, everyone, for your you say undisturbed